Hey guys, thanks for clicking on this video. Today we're looking at Intel, ticker symbol INTC. We're going to look at the fundamentals to see what the fair value of the company is using discounted free cash flow and the Buffett-Graham intrinsic value. Then have a look at some technicals and see what we think is going to happen to the stock in the short term. But if you look at this here, Intel had a massive drop off post earnings there. You can see earnings was on the 21st of October, missed earnings by a little bit, and the stock price plummeted down 15%. So it's currently at $49 a share, which if you look back, basically that undoes everything that's happened in 2021, and it's gone back to basically the start of the year levels. But let's have a look at the fundamentals first, and can you give a like on the video? As always, it really helps me out and I appreciate it. Anyway, let's have a look at Intel. $200 billion market cap, share price of $49, a 2.84% dividend. If you buy the shares before the 4th of November, you will get that dividend. So if you're interested in Intel after this video, I would say definitely buy it because you'll be eligible for the next dividend. So let's have a look at the PE ratio. Is it less than the market? Intel has a very low PE ratio of 9.5. 28 is the current market. So that is a pass. Is the revenue increasing over the last, this is 4 years, and you can see, 5 years. 71 billion to 78 billion. So yes, the revenue is increasing, not massively, but it is still growing. Profit, is the profit increasing? 21 billion and 55 million compared to 21 billion and 102. So that is once again a pass. Profit is increasing, but very, very slowly. One thing I will be expecting is Intel to be buying back their shares, and the answer is yes. 4.7 million to 4.2. That is a massive amount of buyback, really rewarding their shareholders through many different ways in terms of buying back the stock to give you more value. Next is the free cash flow increasing 14.251 billion to 17.326 billion. So that is a pass. And obviously, as you can see, we've got 5 passes. So that is looking pretty good for Intel on the fundamentals. Free cash flow, $200 billion company, $17 billion in free cash flow. That is a ratio of 11.5, which is pretty low, to be honest. That's really, really good. Links up with that PE ratio. And finally, the total dividends they pay in the year, 5.6 billion, but with a free cash flow of around 17, this is a very safe dividend, which is what you want to see. Right, let's have a look at my valuation. So we've got a discounted free cash flow here. We've estimated the future free cash flow, and you can see it is pretty stagnant, around about 17 billion, and this is due to analyst estimates of the revenue being flat, actually increasing next year and then decreasing next year and then also decreasing again. So this is a pretty negative revenue growth. But if we look at the discounted free cash flow, that will give us a calculated stock price right now of around about $83 a share based on discounted free cash flow. They've got a lot of free cash flow, and obviously sentiment is a bit bad at the minute, which is why the share price is down. But for discounted free cash flow, it really likes the stock. Next, you want to look at the Buffett-Graham intrinsic value. This is using their earnings per share, expected growth, and the AAA bond yield. And wow, there you go. Fair value of $90 a share, which is very similar to the discounted free cash flow value, and a Graham price of $68.20, which is basically just a buy and hold if you see that price ever. So discounted free cash flow and Buffett-Graham intrinsic value looks at the stock. If we just quickly go back to Intel's share price with 69, even at the peak there, that would have still been a buy according to that. So this is expecting the stock to grow massively, but sentiment is a bit negative at the minute, which is why I think the price is lower. But if you look at the actual fundamentals of the company, yes, growth is slow, but they've got a lot of free cash flow. They're still generating free cash flow, and their earnings per share and growth rate is definitely justifying a stock of this price. Right, let's have a quick look at the fundamentals. What we'll do is we'll add a 50-day moving average first, and you can see, obviously on the negative side, this has broke massively below the 50-day moving average. If we get the 100-day as well, there was a death cross here, which was probably signifying some troubles, and then the price broke below both both of the shortest moving averages to here. So these moving averages are not really too much use right now because the price has broke so far below it. So let's add a 200-day in red, and you can see here this 200-day. Well, there you can see there was the multiple death crosses there. The price was dropping. So usually you can see the 200-day whenever it's dropped below the 200-day, Intel has, let me get rid of the other ones actually, let's get rid of the 50 and the 100. You can see that whenever Intel has dropped below the 200-day, you can see it's really been playing with that line for what, this is going up to 2014. Resistance up, drops below, comes back up, drops below, comes back up, massive move up, lots of moves here, big swings down and then big swings back up. So based off the 200-day moving average, I would expect that Intel may go a little bit lower, but we probably will have some bullish momentum in the other way very soon. It doesn't drop below the 200-day for very long, and this really has been basically going up and down the 200-day for almost 7 years now. One of the things before I look at the MACD, if we just quickly bring up some points of resistance here, since this is the back end of 2017, and we just extend this line out, and we'll get a trend line up there, and we'll extend it out. You can see that this line hasn't really been broken for quite some time, so there could be even some more downside on Intel in the short term, but if it goes to anywhere close to $44 a share, massive buying signals. It hasn't broke below there in this price movement since 2017. This is really held as an area of support. If ever Intel has got close to here, you can see big bullish moves in the opposite direction. Right, don't normally look at that, but I think that was quite a good point to bring up because of what we've been seeing for the last few years. MACD, I'll just quickly go into the more zoom in, and yes, you can see MACD lines there'll be a sell signal there, and the lines have diverged massively. The signal line and MACD line have crossed, and we're into negative territory here. It looks like it is slowing, so you could be buying now because it is slowing, but you could be expecting further growth. If we are to see another cross here, for example, what happened there, that would have been a great buying opportunity. But yeah, I would say hold off basically on MACD. You want to really see what the stock does. If it goes lower, then I would say once again that 44 mark is the sweet spot if it ever gets there. But right now I would say hold off based on the MACD. The most interesting one though, which I looked at just before, was the RSI, which is the Relative Strength Index, and this is showing that Intel is massively in the oversold range. And the reason why I think this is a good indicator to look at, if you look at the last times that Intel was down here, there you go, bullish move in the next few days. This one, they had a massive down thing where they went below the percentile, and that would have been buying at what, $53, and you could have sold at any point in there. And if we go back to other negative movements here, October 20, massively oversold, similar region, and then shot back up and made one of its best bull runs in recent history. So if you look at times when Intel has dropped very, very low into the very oversold ranges, they've had very bullish movements up. So I think this is the indicator that I'm most interested in right now. Looks like it does have a bit of a rebound, but you can see it touched in the oversold region on the bottom there, 30%, and it looks like it's going back up. So this is definitely RSI, I would say, saying this is a buy. Right guys, thanks for watching. Please give a like on the video if you enjoyed it, and I'll catch you guys next time.